The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, traders and traderettes, to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends, and this is a special edition. And yes, I am in studio at the palatial TFNN offices in downtown Clearwater, where I will be making my way after the next hour, which I'll be in the last half of the hour doing the Tech Insider part, going down and enjoying the last few minutes of summer here in Tampa, where we've gone to go from about 82 this morning to about 50 degrees tonight. And I think even tomorrow is going to be incredibly cold down here in Tampa, maybe 65. Absolutely incredibly cold. Oh, I hear 42. But anyway, it is something. We'll brave through it down here in Florida. You know, we've heard of low temperatures before, but that's it. I mean, we've had a hot summer out here. And if you want to talk about hot, probably no more hotter than the markets right now with a bit of pressure. It is quad witching. That normally means early in the day you have a fairly decent downside bias. In the afternoon, options expire, of course, at the close. That means that you normally get a little bit of bias to the upside as you go into the close. Decidedly negative view out here today. And there is something that has truly changed in the texture of the market. And that is the news and the way that it's being reported and the aggressiveness of which people are coming after some specific stocks. And I think this is the first week I can remember that a big stock has been savaged as badly as Apple by the mainstream press, CNBC. They've had lots and lots of people on berating it. We've had many others the same time. Disney today getting a downgrade, and as far as I could tell, CNBC was spending 2 hours pummeling it this morning. And of course, a little bit of this, I think, is that, and what we will know here shortly, probably the 23rd or 24th next week, we're going to start seeing the short interest in these stocks, and we're also going to get reporting on how short these stocks are. Before, every time stocks got weak, all we heard was the incessant drumbeat that they were going to go higher. What we heard this week was totally different. That is that the sky is falling, and it's falling on stocks like Boeing, Apple. We haven't had them go after Netflix yet. We haven't had them go after a few other stocks. But a lot of big stocks. Now, Disney, if you go after their stock, they own ABC. They can maybe cover your company a little harder this week. If you're Goldman Sachs, can they focus in on the negatives of on the next big story? Can they hammer you back? And that's normally why you don't see a lot of people on Wall Street hammering big media companies. They may say, let me put it this way, they're not aggressive. And what we've seen this week is aggressiveness with malice, I think. I'll put it that way. Like the kind of stocks that are fly-by-night operations, you're getting probably not equal treatment as the fly-by-nights, but certainly they have not let off and are not using velvet gloves anymore. They are using the steel fist of the media to pummel these stocks. We're off 20 points on the S&P cash on any other day. Probably would not be a big thing. After the last 3 days, though, seems very, very interesting that we are seeing such volatility. I thought that probably there was a good chance that we would go into the day today flat, and we'd have little or no movement, and we'd have all the volume from the last 3 days. Just the contrary, we had a lot of downside. In fact, we got to 2013 on the S&P cash. We have significant volume. We've been talking about the volume I've been looking for, which is somewhere around, what was it, about 4.5, 4.7 billion shares. We're already pretty much hitting 2.9 billion shares as we start the show. So this is going to be a big volume day. We'll have to see the last few minutes of it, but it is looking very interesting to me as far as how far the markets are willing to go. And again, back to my theory here, I think a lot of people did get short last week thinking that the market would fall apart on the FOMC meeting. They got short ahead of the meeting and lived to regret it, pushed the market right back up. And of course, as soon as they covered, those probably the same people that ran the shorts probably turned around and hammered it yet again. As we said, the short interest comes out on the 15th and the 1st of the month. That sets us up for actual reporting somewhere about the 23rd or 24th. So we're going to start seeing whether or not we saw a market change in the short interest, especially these big stocks that they've been coming after. I mean, we've had a lot of smaller stocks that no one, let me put it this way, CNBC is not worried about ticking off KBIO or any of those guys. They're willing to play the incessant perp walk of that gentleman 24 hours a day like they are probably one of the other cable news shows where they incessantly ask people questions about something that no one knows anything about yet, and they speculate wildly with no real news. That's kind of the exact same thing. They're trying to fill some news. It's hard to figure out exactly what's going on. My theory was, and still is, that the surprise interest rate change and accommodation by the Japanese really started to filter out. I guess some people knew it, and that's really when the market started coming off. It looked like at the 2070 level we were going to gap up into the end of the week, and a lot of people turned around on that very quickly. And most of the positions, as far as I could see, looked for that. Now, of course, in the dollar index, we've at least come off a little bit of the push. I still suspect before the end of the year that we will be breaking the $100 mark on the dollar index. We're just off 39 cents today at 98.88. So we really haven't come back to that pre-FOMC level, which would be a good indication that that was a false break to the top. But again, probably going to hit 100, bounce off that a little bit. I suspect that's kind of where we go in to the first of the year. If you want to give me a call, certainly do. I am in studio, so I won't be able to get your emails today. I can read what you say in the den and keep it clean, but that's it. Give me a call, 877-927-6648. And, of course, post a message in the den. Of stocks that I wanted to get to that are moving, we can start off. Oh, I forgot to do a little bit of history out here. I'm going to have to sing the song myself since we can't do it in here today. A little bit of history repeating. That's about as much as I sing. On this day in 1889, rocked by news of heavy casualties in the battle against rebels in the Philippines, the Dow Jones Industrial Average suffers its fifth worst daily percentage loss of all time, plunging 8.7% or 5.57 points. Don't we go up or down 5.57 points in a matter of about 15 seconds these days? That day closes at 58.27 for the average. And, of course, that's what passes back in 1889 as bad news. And, of course, it wasn't like there was going to be a lot of good news manufactured in the next couple of hours. We didn't have tons of analysts on the street to tell us why we were all wet. So my guess is that if you looked at the chart on that, you probably had a month of bad news. If you got good news, it was the same thing. You're probably not going to get bad news to change the good news in the next 30 minutes or an hour. Of course, everything today moves so quickly. But interesting nonetheless. Jim Chanos was out last night, and he has a very interesting warning. Makes me think fairly long term, much longer than I generally do. But I thought it was an interesting comment, so I wanted to bring it up on the show today. Jim Chanos has a warning for OPEC. He says, pump oil now because it might not be worth much in 15 years. He says that in 15 years we'll have an awful lot of electric cars and not a lot of reasons to burn petrol. I'm wondering if he is right. I think he could be. We need a quantum leap, a order of magnitude movement in technology for electric storage that we still don't have. That's either better batteries, supercapacitors, some other issue out there. In fact, I wrote today in the Tech Insider about this issue. There is a new company that I highlight in that. And of course, probably the best thing to do right now, if you're just sitting there, is go to the front page of TFNN. Go sign up for those Tiger Dollars. I think I'm going to have a rip-roaring time in 2016, and probably a good time to get the best deal on either the Tech Insider or the Path of Least Resistance, my two newsletters. And I only have one position in either one as we go in today, and I'm feeling pretty good because it's a long position and it's up 4% on the day. On a day where the market is pretty hideous. I wanted to find one stock at the beginning of the month for the Tech Insider. I knew this was going to be a volatile time. I knew that there was no way that you could hold a index for probably more than a couple of days. And more likely now every 6 hours the market seems to change. But it's done well. I'll be selling that at the end of the year. And I'll be setting up, I think, a lot of short positions fairly soon. As far as the Tech Insider, I will be working on that with a lot of stuff that I'm going to be working on over the next 2 weeks in the Christmas holidays. I will be back in the home chair in my own home studio back on the 4th of January, but this will be my last day at TFNN this year. But I'm going to be working a great deal more on working with a short volume and showing it in my newsletter. And I think the opportunity has set itself up, and I've got some new tools to really go after and analyze shorts. I'll be doing a webinar about that January 20th. So sign up for the newsletter now by going to the front page of TFNN. Get those Tiger Dollars, so get a much better deal on it. Sign up for either one of my newsletters, but both will be invited to that webinar on the 20th of January, I think, which is a Wednesday. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Question in the den, and it's a good one. And it says, have we seen the top of the mega bull market? I suspect that we have. Now, are the indexes going to roll over instantly? I don't know. But it certainly looks to me like the big men of Wall Street have decided to go after some of the bigger stocks. They've already hammered a great deal of these down. And yes, I am a polar bear that ate a Kodiak, that ate a grizzly, that ate a brown bear bearish. So I am the absolute turducken of bearishness. But I, like yesterday, think that the time to pull that is probably at the first of the year. Do I have a phone call? No, I do not. But somebody from Lutz will call, I'm sure. 877-927-6648. Of course, I wanted to go to some of these charts right off the bat and take a look at them. There's some stocks that are doing fairly decent without a lot of volume. Of course, probably the news this week out of the budget deal is, of course, the extension of solar cities and other in that veins subsidies throughout at least 2016. Of course, we had some rather large people already short Solar City at much higher levels. And they're going to have to sit on them for a while. Of course, probably one of the biggest shorts out there is Jim Chanos, and he has publicly showed this out there. My guess is that a lot of the huge bounce out here is the thought that maybe he will have to now cover his short positions on it. Again, we'll be looking at the numbers coming out the 23rd or 4th on short interest, but that's going to be fairly interesting to me. My guess is, though, after a little bit, we're probably going to see Solar City. You know, I guess they get a reprieve for 1 year. I still don't see how this company ever is going to make any money. It's kind of the Pandora of technology out here. The business model was flawed to begin with. I don't see how one more year of subsidizing a company like this changes the business model, but maybe they will. You know, with as cheap as natural gas is going to be, man, is it a hard sell unless the government is forcing you to pay a great deal higher than market prices for natural gas out there. Eggnog on sale now, I'm told, in the tin. What else do we have? Anyway, that was one of them. I wanted to look at Apple, and I thought this was very interesting. You did get Apple to get down at least into this gap up. Now, what you wanted to see was some fairly decent volume on Apple. It did get down here to this gap down that goes back to the 8th, what is that, August 25th? Yeah, it came down, hammered down a lot of volume, actually to lower, to 92 bucks on that August 24th low. Opened higher the next day, pulled back, and then gapped out of it the next day. That day you had, 103 million shares. You have, that day after that, 96 million shares. Today, 47 million shares so far. So if you're looking at a gap fill, you finally got it in Apple. I don't know if there's a lot more money to the downside actually to be had, but maybe they were just trying to drive the stock down. But I have a feeling a lot of people are short this. And if you're a big hedge fund, maybe you are trying to just push Apple down because you can make a bunch of money in it in the short term. But of course, you got to cover it. And if you've got a lot of shares, that just pushes the price back up. It's hard to get in and out. I know a lot of people, a lot of fund managers trying to make money before the end of the year could think of something like this. The reality is it's a lot tougher. If you start seeing Apple start drift back up over the next few days, maybe it was nothing more than people out there trying to make a quick buck on the street. My thought, though, is that as viciously as they went after Apple, this is going to be problematic in the future. But certainly they haven't been doing a lot of things very well. On the opposite side of that coin is Microsoft, MSFT, getting an upgrade on a down day. And of course, it's still coming out there. Goldman Sachs, in its infinite wisdom, had a price target on Microsoft at $45. Today they decided to up that to $57. Day late and a dollar short, Mr. Goldman Sachs. Put that in your pipe and smoke it. Again, dollar late, day short, dollar late, whatever. Probably not a great call on Goldman Sachs here on Microsoft today. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back with Carlos in Garden Grove, California, not Lutz, Florida. How you doing today?
Very well, David. David, I have a question for you. I'm a subscriber, and I need to ask you about options of SPY.
Mm-hmm.
I bought them this morning for 16 cents, and I need to ask you, since they're expiring practically tomorrow and I have a small profit, is that a good idea to roll them or just close them?
I'd go ahead and close them.
Okay.
If you got a small profit out here. We had a couple questions in the den, too, about this, but basically the whole idea is, where is it going to expire today? And if you were one of my subscribers in the path of least resistance,
yeah,
I was trying to show this week why just the number that you get from Max Payne is not everything that you want. You want to look at what the number is underneath the V. I call it the base and the goblet's neck. But we were basically, they had the options plus or minus 50 points up or down on the SP or on the actual S&P 500. So we could have had anything from 2,000 at the low or 2,100, and the option market makers would have made just about the same amount of money. It's the largest I can remember seeing since back into the late I think 2007 or 8. And that is because, of course, the FOMC meeting, and a lot of people didn't know what was going to happen, so the option market makers literally went extra wide. And no matter what happened, there's about $2.5 billion in money going to somebody for the options at the close today. That was at the minimum. You had to actually move a lot higher, but that is when you get into these super wide spreads. Not a lot of, on individual stocks maybe, but on the market there wasn't a huge amount. So anyway, yeah.
Now,
ideally, go ahead.
Is it a good idea to let it expire or just close it?
No, if you got somebody to bid on the other side, go ahead and take it now.
Yeah. Okay.
Yeah. The only reason to let it expire is if everybody stands away and won't take your order, which does happen sometimes, by the way. But you can But I would do this. I'd call your broker if they won't take the order today before the close, and you're still 30 minutes out. I would just call your broker and tell them to execute it right then.
Okay.
And that'll show those guys staying away from the other side of the market. Okay.
Well, thank you. Thank you.
Bet.
Have a nice day.
Yes, that's the reason they're called puts is you get it put to you, and I've had to actually put it to people before when, especially option market makers, just stand back thinking that you'll continue to move your price down. At a minimum, you know, if you're a buck in the money, theoretically the call or put shouldn't be any less than a buck. But the option market makers will try to limit their damage, especially on a day like this. And sometimes calling your broker and rattling the cage is the thing to do. Yeah, that was the question. Can you look at where the price would be? The market makers make the most amount of money, and that would be on about 2050 today on the S&P cash. But that's not going to do you a great deal of good. Like I said, they're pretty flat all the way from 2000 all the way to 2100. So they're probably not going to spend a lot of energy out here going after the market. Let's see what else we have out here. If I've got any other questions. Call your broker and you will be, no way, a penny spread right now. Yeah, laugh out loud. Yeah, he said they told me pink. Only, yeah, I believe him. Okay. Just asking thing. One of my neighbors had a small system. The pump motors cost. Okay. Back to the market. I wanted to just read through the din real quickly and check and see if anything else, any other questions. I didn't see any. You can call me, like Carlos, at 877-927-6648. We're going to get back to some of the other stocks that are moving. And, you know, we've got Lennar came out with earnings. They're off a little bit, not a whole lot. I was very interested to see how some of these housing stocks actually reacted. Again, back down to gaps in the market. This one, the gap up happened on the 30th of September for Lennar. Volume wasn't tremendous. It was 3.25 million shares. Today on the way down, though, you have a little bit too much volume in this one. 3.9 as it went through that previous gap up and down. Now the spike, which this thing looks like it could get now, is the low of September 29th. What is that? $46.23. So you still have that out hanging, and it is a higher volume of 4.5 million shares. But my guess is you're going to get 4.5 by the end of the day in Lennar out here. And so you may be watching for a break of that on Monday. Other stocks of interest, we talked about that. CarMax was probably the most interesting to me out here. We had several people of note. Is it CMX? Yeah. Or CNX. Which one did I put? CMX or KMX? KMX, a real hammer down. In fact, I think this was kind of foreshadowed over the last few days, and that is that the lower interest rates have moved car sales farther forward than they've moved other things, i.e. that the super low rates that the Fed has been pushing in the market doesn't really make car sales higher. All it does is push a lot of car sales further forward and into now. And of course, they won't be buying that car in 6 months or a year. So it really doesn't change much of anything. I'm trying to remember, it was Jim Grant that was out this week talking about the long-term fallacies of the Fed policies and the problems in it. You can probably find him on CNBC if you go and look in their video archives. But a great interview on somebody that has a very long-term perspective and why the problems in the government continue to continue on. He's got Jim's, Interest Rate Observer, I think that's the name of it. But pretty good. Now, this did kind of go right back in to the last level, but it looks like it's going to close below it. And that is the November 16th low of 53.46. So we've blown through that one. And there's no question about this one having enough volume. We've had a lot that have either on the high or the lows, the volume's declined and it's come right back into the trading range. This one's blown it out. And that now opens up probably the next big move in CarMax to a gap back on the 23rd of October in 2014. And what is the low of the day? 49.58. So you've got about $1 underneath that. And so let's just call it 49s. Is probably going to be the next support level on it. And as interest rates now start to move, may not move and hurt houses as much as cars. At least that is the theory. Do we have any more? I don't have any more there. What else what I wanted to get to? CarMax. Another company out with earnings is Red Hat. And they are red hot on a horrible day on the market. If I can actually type. Now, we've got a breakout here, and we've got, man, this is where it's kind of tough. And so many of these stocks do exactly this. They break out. It had all the volume in the world, but it has not been able to break through the last couple of humps up into this highs. On the November the 5th, you were up here with 1.88 million shares. Now, we've had a tremendous volume today, 3.1 million shares. But a lot of people saying, yeah, I like this thing bouncing up here, but I'm not going to buy the breakout. I'm actually going to sell it. And that puts Red Hat right back into the trading range today. And you've got a ton of volume. It should have been able to do everything you want. Their guidance is up for next year. I don't know if Wall Street does not believe in it. Maybe this thing's a little ahead of itself. It's had a pretty good run since the last major low. The thing that I would say is if you're going to want to buy this thing long term, you've got a huge gap that I would like to see filled out here, and that gap takes you back to, what is that, the 19th of 2014. So almost, a year ago. Is that a year ago exactly? What's today, the 18th? So tomorrow, a year ago exactly, this thing gapped up, and that gap has never really been filled. 10.5 million shares on that day. So you could come back pretty much to those gaps, and that takes you right back into, let me put my glasses on for a second. Yeah, about 64 bucks. So pretty good setup out here, but you've got some big gaps. That's probably going to be support in next year if the markets pull back. That's probably where the bottom would be in this thing unless things really get ugly. What else do we be? Let's see, let's take a quick look at the markets. We're pushing back down again. 2017 on the S&P cash, 3.2 billion shares. So continuing to see a down day in a lot of these. And of course, a real change in the tone of the market. We've had volume up, now we've got volume down. We've got Lennar, another stock out here on news, and this one's kind of for you guys that have been very interested in natural gas, and this is Golar LNG Partners. I didn't look at the news. This is one of the few out here that is still up on the day. Had a lot more in it early in the day, but both a gap down on heavy volume yesterday, kind of a reversal back into it, did not get it all back. But starting to see some, I guess that was just the earlier part of the day where it looked like crude, some of these other commodities were going to continue to run. I haven't looked at gold here lately. See what it's done. Up 1.5%. So it didn't get back what it has lost yet. We'll have to see whether or not that can hold that on Monday. Of course, the dollar index at 98.81. We're off 46 cents on that, which is basically 0.5%. And we're looking at the continuing volume to come in fairly briskly at 2017, 3.2 million shares. You still have plenty of time to call me at 877-927-6648. We've got a few more stocks to look at here before the close of the show. See out there, plop, is CVS a short? We'll take a quick look at that. CVS. Carmack Corporation. I don't see a lot of action in this thing today. And into cold season, I'm thinking that maybe this probably wouldn't be the weakest stock. And had a nice bounce as everybody started looking at the budget deal. That was on the 16th of, and volume was good, 10.3 million shares. Today, down on 4.5 million shares. Man, I would think that if I was going to short CVS, I would have and do want to wait for it to come back up to this gap. That was the gap down on October 30th that had 23.8 million shares. So got a wonderful gap there and huge volume. Man, that's where if I was going to short it, I'd have to see some kind of move. Maybe you get it in the next couple of weeks through Christmas. Kind of hard to tell. Market looks pretty ugly today, so not thinking you've got it. But if I was going to short it, I'd certainly want it to get back up to that gap. I think there are much better low-hanging fruit out here than before. Now we've got the market kind of down at lows. Disney still at 108.29. It's not down anywhere close to its low of day of 107.36. Boeing much closer to its low. Let's take a quick look at that again. If we're going to see a market break here today, it would probably be in these stocks that are much closer to the lows than in the highs. We talked about this gap up, or actually the two gap ups. You're looking for 9 million, maybe 7 million shares. You've got about 6 million shares now. So Boeing, actually some decent volume. We'll have to see how the end of the day comes in, but it has finally filled that gap from the 20th to the 21st, and it's done so with some energy. This is not a light volume move back down. Of course, they actually had some kind of weakness in the stock and came out after hours and said that they would buy a great deal of their shares back. I don't know if that is a put underneath Boeing, and maybe this is all you get. Volume is picking up a little. Question is just how active will they be buying underneath this move? Like I said, probably better stocks, easier, low-hanging fruit out there than Boeing. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Wanted to look at some of the other stocks out here. Now, not everything is going to hell in a handbasket dish yet, but you'd think that China stocks would be the first. They were out really pushing these stocks early in the morning. I was up at about 6 a.m., started seeing all the discussions about how Macau is coming back and everything else. Really looked like they were on a drive to at least push or hold those stocks up. Quaihu, of course, came out with news. This is one stock that is actually above a fairly long-term low. That's the June 17th high, 2015, $72.65. And you had a huge day on that, 14 million shares. Nothing like that today out here. So you want to be watching to see whether or not this one comes back into the trading range on Monday. But not a real sign of strength. But I tell you what, anything that can buck the trend on a day like this, you want to make note of. Let's see what else is on my list for today. Out here, got a few more, I think. We looked at Apple. IWM's off 1. IWM. So we'll take a quick look at that and also the volume in it. Not a lot of volume in the IWM so far yet today either. We've got 28.5 million shares in it. Yesterday, 41.3. So we'll see how this one comes back in. Either way, you're probably going to come in and bounce off these lows if you don't get higher volume, and that is the December 14th low. That was what, 110? Is that right? 110.28. And we also have one back here at 106.99, which is the next one, and that's the September 29th low. You're almost into that candle out here. The volume is a whole lot less. My guess is you'll get a little bit more into that body. Maybe Monday, Tuesday, we'll find that out. Again, 53 million shares when you're looking at 28.5. Not a rousing sell of the IWM, but, this thing's already come off fairly hot. And my guess is that the change that we saw today, and even actually since Monday, where they savagely went after Apple on financial infotainment cable television, and now that that's been moved to other companies like Disney today, Boeing, I think we have a sea change, and that is some very aggressive shorts in this market. And, the IWM is nowhere near the highs, but Boeing and some of these others are. And the question is, did these guys really pile in on the top up here? Let's see. Oh, wanted to look at a couple before we left the day, and that is CCL, which had earnings out this morning, I believe. And that is Carnival Cruise Line. One of the other ones out here bucking the trend today. Not a great deal of volume. It really hasn't busted back up to these highs. Of course, this is the season of Carnival Cruise Line. Probably a better short in the springtime than in the next 3 months as the weather gets poor. The highs out here are $54.59, and that is 3.5 million shares. That's the last high. You got 5.9. So volume is decent on a day like this. And of course, anything that bucks the trend today might not buck it tomorrow. Tom O'Brien in the next hour. I'll be in the very last two segments of his show. We'll be talking technology. And in the meantime, as always, sow when you can, not when you have to. And we'll see you January 4th. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.